Well, this was an impressive session today to cap off really an impressive week for the stock market, one that I think should give all sitters a greater sense of urgency. So let's start with today, right? From the very beginning at the opening bell, the only question really was, could this Friday selling be capped by an otherwise idyllic summer session, right? It looked like we were going to get hammered. Tech stocks are being weighed down by guidance disappointment from NVIDIA and Applied Materials, two semiconductor plays that, in a way, one represents the new hotspots like gaming and crypto, and the other one, old school computer chips. And both, of course, are components of the Philadelphia Semiconductor Index, which has been struggling in recent months, in part to some high-profile downgrades. In fact, the stocks is right at the trend line, and I think it's going to have to hold there, or we can see even more damage. And then there was a big earnings miss at Deere, which missed Wall Street consensus, sending that stock really into free fall. You know, I read the release, and I got to tell you something. I didn't get a chance to listen to the conference call, so I'm not sure what turned this stock around. But in a blink of an eye, those stocks were powering much higher. In fact, there was a $10 trading range today. And the move in that stock coincided with the rebound in the Dow Jones Industrial Average, which saw the index move really solidly into the plus column right around 11 o'clock. It got its footing and some traction. And then investors really started to flow in, and we started to see it do very well. And then it took off right at 2 o'clock, right when Conor McShane was on. And it was a combination of positive comments about a possible deal in Mexico. And that broke at the same time that a Wall Street Journal report was out that the United States and China were negotiating, sort of putting the guardrails on to get a deal sometime early winter. By the close, though, that lazy summer doldrums had returned. And nevertheless, there are several messages for me that ring out loud and clear, and I want to share them with you. These messages in the market. First, resolve. While it does get frustrating to see these headlines, all the scuttlebutt cloud fundamentals and factual trends, the market has exhibited great resolve, particularly this week. Then there's rotation. I have to say, this is one of my biggest concerns coming into the year because leadership has been limited. And the big question, whether the big board, that could be a broad rally, right, without those fabled big tech names that have dominated the action for so long. For the last couple of weeks, I kind of thought the moves we were seeing into consumer staples were just pit stops, you know, big money kind of moving over there. But I got to tell you, the earnings report from Walmart underscored that you could actually get something more than just nice dividend yields. You can make big money in consumer staples and others. Resolution. I know the experts keep telling us that China has unlimited tricks up its sleeves to beat America in a trade war, like devaluing their currency. I got to tell you something. That used to be the case. Right now, I think it poses a serious dilemma that puts them between a rock and a hard place because consumer spending is at its largest percentage of China's GDP in history. Moreover, Chinese stocks, the Chinese stock market continues to melt down, and President Xi must pay attention. Even today alone, Shanghai was down another 1.3%, Shenzhen down another 1.7%. The last R I'll share with you is revenue. Now, we all know that the bottom line moves the stock market needle. Earnings and have broken out. We're at all-time highs when it comes to corporate earnings, but there also can be a lot of shenanigans when it comes to the bottom line and income statements. Top-line growth has been robust as more businesses are now able to pass on higher prices without losing volume. I think it's time for investors to begin to rebalance your portfolio. I'm putting together a list, folks. It's going to have consumer staples, oversold Chinese names, and some more brick-and-mortar names. I think they all have great risk-reward ratios. So I have it ready for you before they open on Monday. Go to wstreet.com.